Yep, we're good to go.
Good afternoon. Powering progress, 1 meter at a time. This is the vision that charged a group of engineers to establish Itron, a global leader in smart metering technology. Smart metering has become the backbone of the global utility market, with Itron at the center, pioneering this innovative industry. Hello, I'm Kenai, and along with my fellow analysts, Samantha, Pierre, and Maria, we pitch a buy recommendation of Itron at target price of $132.82, representing a 23% upside from the January 31st closing price. We make this recommendation based on our 3 key thesis points. First, driving growth in their integrated solutions. Second, their leadership in EV markets. And third, their grid edge intelligence. Moving on to a quick overview, Itron was established in 1977 and is a global utility tech company that operates in 3 key segments. First, their network solutions makes up 66% of revenue. Second, their device solutions, 21%, and third, outcomes, 12%. Of this revenue, 86% comes from initial product sale, while the remaining 14% comes from services performed post-sale.
Thank you, Fiona. With electricity demand expected to increase 3.4% annually, there will be a more expansive need for Itron's products and services. North America has already reached 77% in smart meter adoption, so the most significant place for growth is going to be Southern Asia, Latin America, Africa, and India. Itron already has a presence in India and has targeted growth in the APAC region. The most significant electricity consumption driver is artificial intelligence. Data centers consume 4.4% of total electricity consumption, and this number is only expected to grow. Infrastructure is also a big driver, as new construction requires meters to track utilities. Construction has been on a continual upward trend over the past decade, and construction for highways will drive additional demand for smart lighting. AI is also an industry driver in this area. The new administration has announced the recent Stargate venture, which will provide $500 billion to build 20 data center locations. As the demand for smart meters increases, Itron will see its greatest competition from companies Siemens, Xylem, and Landis+Gyr. Siemens is a much larger company than Itron, with a market cap of $188 billion, compared to Itron's $4 billion. Their operations expand across multiple markets, so they mostly compete with Itron through their smart infrastructure segment. Secondly, Xylem. It mainly delivers meters for water, and thus competes with Itron in this particular part of the utility market. Lastly, Landis+Gyr directly competes with Itron and provides the same products and solutions. However, it lags behind Itron in every key area. Itron is outperforming its competitors in its returns. Its ability to turn over assets into profits gives Itron an edge over its competitors.
Thank you, Maria. Our first thesis point focuses on Itron's integrated solutions, smart lighting, and energy management. Itron is transforming how cities and utilities manage energy with its NLCs, network lighting controllers. In Paris, they cut energy use by 30%, saving millions in utilities, while also reducing operational costs by over 20%. Beyond lighting, their smart meters and grid management boosts energy efficiency by 15 to 20%. With the smart lighting market set to grow by $165 billion through 2034, their software and services leadership drives high margin and recurring income. Our second thesis point focuses on their leadership in the EV markets. EV market is set to hit $1.46 trillion by the end of this year, with a 17% growth annually, and set to hit $2.73 trillion by 2029. This means that demand for the EV charging is skyrocketing. The charging station market is set to grow 25% through 2030, and Itron's smart meters, grid automation, and energy management solutions are critical components to make EV charging scalable. Their prime example of their partnership is with PG&E. They help customers install level 2 chargers without expensive electrical upgrades. Our third thesis point focuses on their grid edge intelligence. Grid security is a huge problem, and Itron is tackling it. Its market is set to grow to over $22 billion by 2030, And Itron's AMI systems already protect over millions of utility meters globally. Also protecting like real-time data threat and encryption. On top of that, their OpenWay Riva platform brings in IoT, edge computing, and utility savings, letting utility companies save millions of dollars in energy and use better energy management. This makes the grid smarter, safer, and more reliable, putting Itron in a strong spot for future growth.
Thank you, Pierre. The three main risks facing Itron are new developments in the AI sector, cybersecurity threats, and smart device cost. Chinese company DeepSeek recently released an AI model that could potentially lower electricity demand. Secondly, cyber attacks are a threat that faces the entire industry. However, Itron prides itself on its cybersecurity strength. And lastly, smart infrastructure is more expensive, which could lead potential customers to going with a less costly alternative. However, smart infrastructure is particularly attractive due to its higher ROI and is less expensive over the long term.
Thank you, Maria. Moving on to Itron's ESG. Itron takes part in the UN Sustainable Development Goals and is constantly reducing their emission rates. Itron also firmly believes in giving back to their local communities. Itron in 2023 was able to raise $226,000 and volunteered over 700 hours. This is partly to Itron's requirement for all full-time employees to volunteer a minimum of 32 hours a year. Finally, their board of directors is comprised of 8 independent directors and their CEO, Thomas Dietrich. This is representing a 1-to-3 ratio of women to men on their board.
Thank you, Samantha. Moving on to their financial analysis. Itron has had high restructuring costs over the past 5 years, but we are seeing this go away with only $5 million remaining to be expensed. That will be expensed in early 2025. As these go down, we'll see Itron's profitability increase. Itron's gross margin has remained consistent, averaging 29% over the past 5 years, while their operating margin hit a peak in 2019 at 5.3% before 3 straight years of negative returns, and then in 2023 they had a positive turn of 5.9%. As these restructuring costs go away, we will see a more consistently profitable Itron. Itron's debt includes a $1.2 billion revolver and 2 convertible notes. The first convertible note has a 0% interest rate and comes due in 2026. The second note has a 1.375% interest rate and comes due in 2030. Itron uses this debt strategically to pay off older notes and to repurchase shares. Itron's tax rate is heavily influenced by the current political happenings. With the election of Donald Trump, we will see their tax rate remain at 21%, allowing Itron to hold on to their earnings.
Finally, we evaluated Itron's revenue based off the EV infrastructure market, smart streetlights, and the electric meter market. As mentioned earlier, they have 2 segments of revenue, product and service revenue. For product revenue, we forecasted their network solutions based off a 20% growth in the smart streetlights market. For their device solutions, we grew it by 7% based on the electric meter market, and finally, their outcomes was grown by 25% based off the EV infrastructure market. For their service revenues, we grew it by average growth because we saw neither a significant increase nor decrease in that segment.
In summary, we pitch a buy of Itron at target price of $132.82, representing a 23% upside from its January 31st closing price. We recommend this based on our 3 key thesis points. First, driving growth through the integrated solutions. Second, leadership in their EV markets. And third, their grid edge intelligence. Thank you for their time today, and we're open to any questions.
Great. Well, yeah, we'll give these guys a second to collect their thoughts, but yeah, they'll start firing questions whenever they're ready.
Wonderful. I love it when you just do this. Have they laid out any margin targets, maybe for operating margins? And I guess, kind of a follow-up question to that, your margin targets, what were they, 5.9 or so? Did you do any modeling excluding the restructuring costs?
Yes, we did. If we go to their operating margin, you see that they still have those negative returns in 2021 and 2022, but in 2023 they would be more on par with their peers at that 8% operating margin. And we see this in our base case remaining the same throughout the next 5 years, whereas our bull case increases slightly to 9%, and our bear case decreasing to the 5% from previous years.
Okay. And those margins, I noticed in the comp table, they're a little bit lower, even the adjusted margins, it sounds like, are still a little bit lower than some of the peers, but yet they have a little bit higher valuation. Do you have a kind of handle on why they might be being, valued a little bit higher despite a lower margin profile?
Yes, so with their closest peer, Landis and GYR, they, without the restructuring costs, they would be on par with that operating margin, while CM is a much larger conglomerate that has more room for that margin growth, as well as Xylem, who only operates in that water metering.
So that was the bottom line, that they're a little more,
Yeah.
that's their closer peer. Okay, cool. Great, thank you.
You want me to go? So, in terms of tariffs, obviously that's kind of a big issue right now in terms of the economy. What's your guys' view in terms of how they'll be affected on tariffs?
For sure. So they have manufacturing plants across the entire world, with 5 of their 7 in Europe alone. So for their American consumers, they would produce in their American plants, avoiding those tariffs from producing overseas. While with their European consumers, they would produce in Europe, with the potential European tariffs imposed on America, that would mitigate that risk.
But in terms of their international sales, they're pretty low, right? As of right now, they're primarily domestic.
Yes, so with that, we are projecting that they will expand further into Europe to hone in on those EV sales that are expanding in Europe right now, especially with their plug-in hybrids. So over our forecast, we project that they'll have a bigger presence in Europe.
And then in terms of, on the water metering side, in terms of the fires in California, like, they're supposed to be smart meters, right? And there were some pretty big failures in California. Do you see that as a liability or an opportunity for them going forward?
Thank you for the question. As far as fires in California go, we would view that as an opportunity for them to expand with their newer smart metering technology to help mitigate that risk in the future.
Just curious, your price target, what do you see as, I mean, you mentioned some risk, but what do you see as the biggest risk to that 12-month price target?
So, Kina, can you go back to the first slide? Thank you for the question. So we valued the DeepSeek and new developments in the AI sector as the risk that's going to have the most impact on the company. And that is because this is out there now, and it is expected to lower electricity consumption projections. However, there has been recent scrutiny as to the accuracy of these claims, whether it's actually less expensive. They said it was like $6 million in cost to develop that AI model. However, that was only for the final trial run, and it was not accurate as to the entire development of the model.
So you guys, everybody calls me Billy the Bear, because I literally short a lot of companies, but the strike price on a convertible debt on this company is at $200, borrowing at 1.3%. Do you think maybe your price target's maybe a little bit on the low side?
So as far as their the convertible debt that Itron issued,
Yeah, where their strike is on the
Yeah.
convertible.
thank you for your question. Itron's conversion price is at 126 and 131, depending on which convertible note. So we are right in there with a slightly lower, more conservative estimate from those convertible notes.
I want to dig in and touch more on the tariff thing. So you said they manufacture in North America, pretty much for North America. Do you know where they source their components that go into those products? Are there any that are coming out of Mexico or Canada by any chance?
Thank you for your question. Yes, some sources of their components do come from Mexico. They have a contract with a Mexican production company that produces utility products, and that company has also multiple contracts with their competitors.
Do you know if they have any kind of contingency plans if Mexico gets hit with a 25% tariff is their supply chain, do they have flexibility with their supply chain to find other providers of those products that they're getting out of Mexico if they all of a sudden cost 25% more?
Yes, thanks again for the question. They do have plans on bringing their manufacturing to the United States also, so they would not be, so that they can avoid tariffs also.
And then one more, real quick, before I pass it on. Have they ever struggled with supply constraints in the past? And supply chain issues in the past?
Thank you for the question. In the past, they have maintained over our 5-year forecast, at least, or the 5-year historicals, they haven't had any supply chain issues, with most of the problems coming from other investors in international businesses.
So in terms of their, basically the demands that are gonna be put on the electrical grid, in terms of EV over the next, 3 to 10 years, are they gonna be able to do smart metering at the home, or is it more creating on the public side?
Thank you for the question. So, the charging stations and the EV market, how Itron helps is basically their products. Their products are like the main components that help the EV charging to be more scalable. Like their AMI system, their integrated grid, and their VG2 batteries.
So it doesn't really matter whether or not it's, a parking station or Walmart or it's your home. Like they have the ability to go either direct to home or
Yes,
to these areas.
they do have that.
How much time?
About another minute and a half, so 1 or 2 more questions.
Do you guys put your own money in?
Yes.
Yes, definitely.
They have, at least they ended the most recent quarter, which may not be in your numbers yet, they ended the quarter with over $1 billion in cash. Have they outlined any plans, ideas, what they want to use that cash for, M&A or share buybacks or dividends or anything like that?
Yes, so most of that cash came from the issuance of that $805 million convertible note, which they said that they are planning on doing share buybacks with that, as well as supporting their operations and using some of it to pay some capped call options for dilutive effects on those convertible notes.
What is their history of share buybacks
Oh, what's the history of share buybacks?
for Itron?
For Itron, in our 5-year historicals, they didn't have any until this convertible note issuance.
Great, well, we are at time, so congratulations, guys, you're finally done. You put a ton of work in, and we're happy to share the results at David's Pizza, and you can pick the minds of us and talk about your presentation, so.
Look forward.
Thank you, guys.
Congrats.